Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report so green, it might just photosynthesize your portfolio, but green like dollars not necessarily healthy. We'll find out if this Vanguard green investment is actually cultivating profits or just, well, let's see. This quarter's performance is a bit of a mixed bag, or maybe more like a bag of unmixed ingredients. No revenue to speak of, expenses piling up, and a reliance on loans. What does this paint for the picture of this investment limited company? Let's decode. Also, make sure to join our Discord server. The link is in the description down below. Let us know your opinions and discuss it together. This is a 10Q form. It's a quarterly report that public companies make to the Securities and Exchange Commission, the SEC. Inside this form, companies must share important details about their business. It's where companies provide a snapshot of how they're doing and what challenges they see on the horizon. Today, we are investigating the report from Vanguard Green Investment for the period ending in April 2025. The report is for the quarter that ended April 30, 2025, plus we get to take a peek at some numbers from July 2024 for comparison. First off, let's get the name right. We are talking about Vanguard Green Investment Limited. They used to be called Mu Global Holding Limited, but they changed their name. They are based in Taipei, Taiwan, and their main phone number starts with the CIV86. This company is registered with the SEC. The company's common stock is traded under the symbol VAGES, but you won't find it on the New York Stock Exchange or NASDAQ. It's on the OTC market, also known as the pink sheets, meaning it's traded a bit off the beaten path. There are currently 59,434,838 shares of that company's common stock available as of April. Now let's look at the numbers. We'll start with the balance sheets, which tell us what the company owns and what it owes. First, the assets. Looking at the figures from April last year of 2025 compared to July 2024, their cash and cash equivalents, so the actual ready money they have, tanked drastically from 12,050 steep change. It gets worse. Prepayments and deposits also went down from almost $5,000 to $1,000 to $1,800. This gives them total current assets of less than $2,000 for the quarter. That is, again, as compared to about $17,000 11 months earlier. What's all the cash being spent on? As for non-current assets, those are zero. Now for the liabilities. The total here is almost $700,000. This represents all sorts of debts the company has to pay. Digging into it, just north of $134,000 is labeled non-current liabilities. Non-current liabilities are loan debts not due soon. Most of this is in form of loans from either directors or third parties. Wow, almost 6 times, close to $500,000 is current liabilities. This is debt that is due fairly soon as the quarter ended. There's some smaller categories included in this, including just $1,785 from franchisee deposits. But the major part is almost $350,000 due to one of the company's directors. That leaves a sizable stockholder deficit, meaning they don't have enough investor equity. In short, they need more investment. Total liability and stockholder deficit is tiny compared to it, around $2,000. What has the company spent all the investor capital they raised on? Let's look at the operations statements. Now here's a fun area, the statements of operations and comprehensive loss. We discover the profit making of a company, except there aren't profits to begin with. These statements will show us how the company performed sales during the 3 and 9 months ended in April 2025 and 2024. First, revenue. Well, there is nothing listed here. For either 2025 or 2024, they literally make $0 in revenue. Zero revenue logically results in zero gross profit. Other income, on the other hand, is listed as $32 during the quarter. This is presumably income from investments and not the core business operations. However, what do they spend on? General and administrative expense. That is a whopping $1978 for the last quarter. It's less than the same quarter last year of almost $20,000. These include salaries, wages, and fees for professional services. It is money you need to spend to keep lights on. That results in $1,146 loss for the quarter. Total comprehensive loss isn't too far off the mark at that same deficit value. This is due to some currency translation losses, which really don't account for much. It all means they make no money and are losing thousands of dollars for each quarter. Let's move on to cash flow. How do they actually manage to live? Cash flow from operating activities, which measure how much cash is pulled or injected in continuing regular operations, show a net loss of these if $40,000 for both years in the 9-month time frame. However, this actually isn't as bad as in 2024. They made some money in foreign exchange value, the trading of foreign assets, resulting in reduction of the total bad value from around 50,000 to 40,000. On the other hand, financing activity or bring in wealth almost halved from $70,000 to $32,000. This is bad news and it aligns with the tanking asset values. And just as we confirmed with the first statement, cash from the beginning to end of the time frame went from over $12,000 to just $93. How can the company continue to sustain itself? Let's check the notes that will hopefully provide an explanation to all that financial data. First off, it says the company plans to provide wellness and beauty services to customers through outlets or distribution. They acquired 100% interest in U Worldwide Group Limited, a company from Seychelles and Hong Kong back in 2018. And as of April, the subsidiaries operate in both Seychelles and Hong Kong. The company says that has intangible assets due to trademarks, but according to financial sheets, amortizations and impairment costs make it worthless. That said, they might have spent money to acquire such assets, losing more money. Here it is. The company recognizes it has substantial doubt about the company's ability to continue as a going concern, a big red flag. Management hopes shareholders, its director New Yen, or maybe even external financing might pull them through. If a company can't stand by itself, can it stand? Looking over some more expenses, general and administrative costs included $9,130 spent on something called professional fees. What makes a cost professional anyway? Here's a major point from the report, and I quote, "The amount due to related parties are unsecured, interest-free, with no fixed repayment term for working capital purpose, so indefinite loans." Looking over a debt schedule, you'll discover their director New is owed about $400,000. Again, this is labeled specifically is unsecured. In other words, New gets paid back eventually and in no particular time frame. So the executives of a non-revenue generation company borrow money virtually indefinitely. In Hong Kong, they're subject to a tax rate of 16.5%, if they made any money, that is. They also lost thousands of dollars in Hong Kong operations, as well as Nevada, meaning it's just loss after loss. That means they can use those losses on future tax reports to probably reduce future income. If the company continues to stand, that is, Cole, what does this actually mean? Time for the final takeaway, and the reason why you guys subscribe to, there's very little going for Vanguard Green Investment right now. They have no income, are spending money, have lots of debt they can't repay, and are continuing their business with investor money which is running out quickly. Management themselves don't seem too confident about the company's future, declaring a material weakness in controls and procedures. I can't blame them. The only thing propping up Vanguard Green Investment Limited seems to be investor capital being dumped into a pit, and the kindness of Nian Yan, who's bankrolling the whole operation. Unless there's a major strategy shift that starts generating consistent revenue, Vanguard Green Investment is likely facing some rough seas ahead and has very little in terms of long-term security. Ultimately, for now, with losses mounting and reliance on debt, it's hard to justify any investment in this company. Alright, that's our breakdown of Vanguard's latest filing. This one wasn't particularly hopeful. Let me know what you think in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Also, remember to join our Discord community in the description. Thanks for watching. See you next time.